Jonathan, today a notable mover on the exchange is telecoms. We heard a bit of rumors coming out there. What do you make of that 3% rise?
Yeah, look, I mean, telecom is an interesting one. I mean, if you look at all the metrics on it, I mean, price to earnings ratio, it's at 6 times, it trades at half times NAV, it's very cheap. But the biggest problem for me is the management of telecom. And I mean, that whole news that maybe government takes it private, I don't see it as a good thing for me as a taxpayer. But certainly if you're a shareholder and you want to try and get a little bit of a gain, because they probably won't be able to buy it at less than what they listed it at.
Might be a typical example of something that's cheap for a reason. And do you think this 3% rise might be an ideal situation for investors that's still holding on to the share to maybe just chuck it?
Well, we don't own telecom. We haven't liked it. And it basically comes down to management. And we think it's been badly managed. And I mean, it's got a fantastic asset. It owns the fixed infrastructure for landlines in South Africa. And I mean, surely they should be able to make money out of it.
The point has been made that when the KT Corp blocked, the deal by KT Corp, the proposed deal was blocked by Cabinet, I think the share price dropped by 8% at that point, and I think the Telkom management were as surprised as the KT people and everyone else, because Cabinet must have been consulted along the way as the major shareholder. There were 7 cautionaries along the way. There must have been discussion, yet they blocked it. So the market said something there, and then when the share price rose, isn't it saying that people want to get out of this share because it's neither one thing nor the other, neither fish nor fowl. It's neither a national company nor a private listed company.
Well, I mean, that is the problem that you've got here. You've got a listed company, but it's being run for government purposes. And I think that's what the rumor is maybe government takes it private, because I know they say that then they don't have to be bound by all the JSE regulations. So I mean, you know, if you want to do whatever you like with it, you can't have public shareholders.
I agree, and I mean, you won't be attracting any investors if you don't even want to abide by the rules. And I think that's probably one of the problems that we've seen. We know that government isn't the most efficient, or any government in the world for that case, isn't the most efficient in allocating funds and distributing funds. And this company, where they hold such a key ingredient in telecoms that you would pay for in any country, maybe a negative vibe being sent out to KT and any other potential buyer in that share.
Yeah, well, I mean, certainly, I mean, government blocking the first attempt by KT to come and buy it. I mean, anybody who is looking at it is probably going, okay, well, you know what, I don't want it.
What worries me is the way people talk about the 10% PIC holding, which is the government pension money, really. They speak of it as if it's a block vote. So if it's exactly 50% or 50% and a bit, government 39 and the PIC about 11. Surely that's wrong. I mean, the PIC should not be doing what government wants. It must be looking after the long-term interests of its pensioners.
It should be, but I think we all know that the PIC is, in my mind, it's an extension of government, and it's money that government will use for whatever policies it wants to implement. So I agree that it should be looking after the pensioners' money, and that should be first and foremost, but I think it actually isn't managed in that way.
Jonathan, let's get back to the market today. We saw financials being one of the strong performing sectors. Yesterday also doing very well. I touched on it yesterday that maybe our South African banks might be a new interest point for foreign investors. Do you think that's something that foreign investors would actually consider?
Well, I mean, our banks, I mean, if you look what's happened to our retailers have really run very hard, and the multiples are very high in my mind. And I mean, South African banks, I mean, compared to global banks, South African banks are fine. I mean, they've got decent ROEs, they're making money. I mean, there's many global banks that aren't. They're well capitalized. I know there's a bit of concern around Basel III with liquidity, the matching of the liquidity not being right, but you see the banks already doing that. They're not giving as many home loans, and they're going more into the unsecured space to try and get that better matched. And I mean, the banks, I don't think they're particularly cheap where they are now, but I certainly wouldn't say they're very expensive.
I agree with you on that point. The other thing that I wanted to ask you about is Capitec. Capitec was probably after first rand, which is a favor in many portfolio managers' portfolios. Also just a strong performer and definitely the leader in the unsecured space after Able. So you think that share price still has a way to go if we start looking at all these different factors that might enter the market?
Well, I mean, we own Capitec, and we like Capitec. It's probably on our ranking table, it's probably the highest bank on our ranking table. Admittedly, you're paying a lot for the growth. I mean, it's on 20 times multiple. But I mean, I can see the growth, and I know there are concerns about a bubble in unsecured lending, but I don't think we're in that phase.
The point isn't it also is that it's not whether the growth is going to continue, but at this rate. And the thing with Rian Stossen is that he has always defied the market's expectations. They keep saying you can't keep growing at this rate, and he does. So it's not so much perhaps that the bubble is a danger to the system, but it's whether those earnings can be sustained, or rather the growth in those earnings.
Yeah. Sure, I mean, you look at it, I mean, they're bringing 100,000 new customers in every month. I mean, that's very good. I mean, they've got a very lean cost structure. I mean, the other big four banks have all got quite heavy legacy systems, and they're quite expensive to manage. And I mean, I think that's where Capitec really has a cost advantage over the bigger banks.
Truly a fact that Capitec has actually come through and supported that PE. Just quickly touch on the Platinum. Platinum was one of the detractors on the JSE today. Just a case of commodities being out of favour in this uncertain times.
Well, also that yesterday Lonmin was the big gainer by 5%, I think, and today 2 platinum companies are among the big losers.
Yeah, look, I mean, there is certainly a lot of volatility in the platinum space. You look at all the sell-side analysts, and we're actually in agreement with them in some respects, where, you look at platinum. South Africa is the platinum provider of the world. And I mean, our platinum mines aren't making decent ROEs. So it says you shouldn't invest more money. And we're seeing that the signs now. We've seen Aquarius and Anglo Plat come out and say, we're not going to, we're going to put a mine onto mothballs. And that's what we've been looking for, is the first sign that capacity is going to come out of the market. And we're seeing that. So we've been adding to platinum. It's been a sector that's been absolutely, it really has had a bad time over the last 24 months. I mean, you look at where the prices have come from.
That was Jonathan du Toit, analyst at Truffle Asset Managers.